Hey, how are you? In this video, I'm going to discuss what is going on in the insurance industry in current 2024 and going into the next year, 2025. A lot of people have a lot of uncertainty and are feeling very nervous about the whole insurance industry. It seems like it's crashing. The insurance companies are going under. They are losing a ton of money. And it's very, very difficult for new insurance agents to get insurance carrier appointments, for customers to, even get insurance, and rates are going crazy through the roof. So I'm going to discuss exactly, first of all, why this is happening in the first place, what I think this is gonna, mean for insurance agents, consumers, and when things will get better, if ever. So let's dive into the video. All right, real quick, before we dive into the video, I just wanted to do a quick shout out. We now have a texting number where you can reach me directly. I will be monitoring these texts, trying to help insurance agents to get their own insurance agency started. So hit me up if you ever want to reach out to me. The number is here, we'll pop it up right here. Boom, 310-496-6678. That is the number that I can text, and I'm kind of building out for communicating with other insurance agents. So hit me up if you need any help, consulting, or you want to discuss Tudo. Tudo, boom. That is a software system that we use that is the #1 CRM software that we recommend and we use in my agency that is helping us grow with a ton of leads and opportunities. So hit me up if you're interested. All right, let's get into the video here. So first of all, what is happening and why is this happening in this current situation with insurance carriers? First of all, what is happening? Insurance companies are currently making it very, very difficult to get insurance policies for consumers. Specifically, home and auto insurance companies are really putting a block on new business coming in for customers and agents being able to write those policies. So the question, most people are asking, it's frustrating. We're insurance agents trying to sell it to customers. Customers are upset. They can't even buy a policy. Everyone's upset on all ends. And then, so you ask the question, like, why are the insurance companies doing this to us? Are they trying to punish us? Are they trying to punish the customers? No, they're not trying to do that. They are simply just trying to run a profitable business. And look, guys, like I'm an insurance broker. I see both sides to it. Like I see the consumer side, I see the agent side, I see the carrier side. And I understand why they're doing this. It makes perfect sense to me. They need to run a profitable business. And when the state or there's regulations that are stopping them from doing that, it just, they have no choice but other than to do this. Insurance companies, some of them out there are not, the nicest players out there, but most of these companies are backed by good people and have, great teams that are simply just trying to run a good business. So to give you an example, let's dive into real numbers, what's happening. Let's just use Liberty Mutual as an example, an insurance carrier. Liberty Mutual collects insurance premium from customers that are trying to pool their money together. That's all insurance is. It's a pool of money that people put, each person, each customer in the that has a policy with this company pays a small portion. That's what your insurance monthly premium is. You pay a little portion into this pool of money so that if there ever is a disaster where somebody gets into a seriously, bad accident, that pool of money is there to protect a handful of those hundreds of customers. Right? Not everybody has a massive incident every single year. So that's what insurance is. It's a pool of money, people trying to transfer risk and pass on risk to a larger pool of money in an insurance company. That's really all insurance is. So now the insurance company is the one holding this pool of money. And that's also how they make money, right? So let's just use Liberty Mutual as an example. Let's just say they collect $1 million of premium in that pool of money every single year. So $1 million. Now, they have certain expenses as a company, obviously. They have payroll for employees. They have, offices. nationwide. They have, fixed overhead expenses. So you can typically, this is a standard number and just a ballpark. Every company is different, but let's just assume for 30% of that $1 million goes to their fixed business costs. So now 300,000 of the money is automatically gone. They are left with $700,000. Now, the insurance company has to pay out some claims too. Like they need to actually cover customers who are getting in accidents or getting their homes on fire. They need to pay out some claims. So let's just say that sweet magic number is 60% of the rest of the money. So 60% of the $1 million goes to claims. So now $600,000 goes to covering people's homes, auto accidents, whatever. And guys, just so you know, these are arbitrary numbers. These are not real numbers. These are just examples. So 30% goes to covering business expenses, 300K gone. 60% goes to the customers being covered, 600,000 gone. They're left with $100,000. That is how insurance companies make money. There are loss ratios that companies are constantly looking at, and that's why there's underwriting. They're trying to assess risk, trying to mitigate the risk for somebody who's a bad driver, for somebody who makes a bunch of claims. They don't want those people because they are going to tap into that pool and ruin it for everyone, basically. Now, what's happening now is companies like State Farm or Allstate or Liberty Mutual, all these other companies that offer home and auto insurance, their loss ratios have surpassed 60%. If the company goes below 60%, that is actually a great thing. That's usually when companies start to go into profit sharing zones where they actually will start to, because of their profitability that year, they'll actually start to provide bonuses and give out bonuses. I'm sure you've probably heard some agents and brokerages out there get bonuses on top of their commissions, like at the end of the year, quarterly or annually bonus, because of the profit sharing, because the company kept the loss ratios under 60%. They had an extremely profitable year. They're required to profit share bonus out agents as well. The problem is State Farm, Allstate, Liberty, all these companies out there, farmers, everyone under the sun right now, because of the incorrect rating purposes that were putting place enforced by the state, they cannot, their loss ratios are exceeding 60%. So just to give you an example, State Farm's loss ratio was something like 120%. So not only did they pass the 60%, they passed their whole 100%. They went above 100, they went to like 120. So they are deeply going down in the red, financially losing money. What does this mean for this transitions nicely into what does this mean for customers? For the company to start to recover, to heal from this massive loss that happened because of COVID and rate restrictions, they have to increase rates. So because there was a moratorium, a stop on rate increases, now the companies have to do these giant rate increases. They went from basically 2 or 3 years of zero rate increases to now, because there's so much loss, they're jumping up 30%, 40%. You're seeing companies putting out these like giant rate increases for specifically home and auto insurance. So now customers are going to see their bills and they're going to be like, whoa, that's a 30% rate increase. They're going to freak out. It's going to be really bad. They're not going to expect this. Also, inflation's going through the roof, so customers are over here scratching their pennies together so they can buy some eggs at the grocery store. You better stop going to Whole Foods. You better start looking at places like, the Dollar Tree, because, eggs are going through the roof. And insurance companies, everything's going up. So now insurance costs are going up. Consumers are going to be sticker shocked with their renewals as these rate increases, go through in this year, 2024. And little by little, this will start to heal the insurance companies financially because they're getting the proper premium through the doors. Now, what does this mean for insurance agents? Insurance agents are simply trying to navigate the waters. Like, we are also trying to sell policies to customers, which are very difficult to do because the companies are trying to pause these old rates and pause new business for wrong rating. And it's just making it very difficult. On the bright side, it's harder to sell policies, but on the bright side, the premium on these policies are way up. They're up 30%. So obviously, as agents, our commission is directly tied to the amount of premium that we sell. So on the bright side, once we do sell policies, it is at a increased price, we will start to make larger commissions. Our book of businesses will start to grow organically simply by the rate increases, which is pretty cool. There's, a bunch of things going on both ends, consumers and agents. And finally, I will give you my prediction on when I believe this will start to get itself sorted out and things will start to go back to normal. Starting at this point right now, we're halfway through the year 2024. I do not predict there will be any really signs of serious improvement until the end of 2025, at least going into 2026. That's when we'll probably start to see the insurance companies are now recovering financially, they are healing, they've gotten the right rate for a while, and they can go back to a state of more of a loose market instead of what we're in, which is a very hard market for personal lines insurance. They'll actually start to want the business. They'll open the doors up, say, agents, go ahead, start to sell. And so this also means for people out there that are starting insurance agencies, this is a very, very difficult time to start your insurance agency because the insurance companies are extremely hesitant to, first of all, write business with even experienced agents, but let alone a brand new insurance agent. That's somebody that they see as a high risk. They don't necessarily want new agents right now, nor let alone do they want the business itself. So in 2025, 2026, that's when the carriers will start to open up. So if you're a new agent really just kind of getting going right now, I highly, highly recommend go work for a brokerage. Go work for an agency that you would like to model or be like, because that will give you the experience, set yourself up, stash away your cash, and put your money away in the meantime while you can set up your own agency and set all that up on the back end structurally so that, once the appointments start to kind of open up, carriers start to open up, go get yourself appointments, boom, you're off to the races. Also, another thing you can do is set up a structure. Maybe you work for an agency and maybe you own or you have an option to buy your agency or your clients out after you do leave. So it's kind of like a buyout clause that you maybe put in place. That's an excellent way to, get the experience, make commissions, and then eventually also transfer your clients out. That's a fantastic way to do it. So if anyone's interested, we're always hiring here. Check out Adelphia Insurance. There'll be a link below to submit a form if you are interested in doing an interview or hiring, working here at Adelphia. We are, constantly trying to grow and improve and take things to the next level. Hit us up, and hopefully that brought you some value. I really hope it did, and just allows you to understand what is going on in the insurance industry and when it'll get better, and overall, just how you can set yourself up for success. So that's all I got. We'll see you guys at the top. See you soon. Peace.